Here is your Bull and Bear stock of the week. Well, a farm equipment company and an office supply company make up this edition of Bull and Bear of the week. Shiraz Mian, our research director, here to fill us in on the reasoning behind the picks that he's highlighting here. So we'll start with the bull, like we always do. AGCO Corporation, AGCO, the ticker symbol, is that farm equipment company. What makes this a bull?
This is the play on the positive outlook for the agriculture commodities market in general.
All right.
And we are seeing a turnaround in demand and in prices for egg commodities in general, though they have moderated some in the last few months. But the overall trend is positive, whether you look at North America, Latin America, Asia, or even Europe. And that's a cyclical trend, and it translates into then greater demand for farm equipment and all the related products and services. And the AGCO is the third largest farm equipment company in the world, essentially pure play on this global cycle, and that's primarily the reason. It's a conservatively run company, a clean balance sheet, strong presence outside of North America. It doesn't really have as good market share as some of the competitors have here. But in Latin America, in Europe, in Asia, it's very good, and the overall trend in those regions remains very positive. Now, despite this positive backdrop, their European exposure has been weighing on the stock to some extent, but my feeling is that those concerns are misplaced. The AGCO's core European presence is more in Central and Northern Europe, and those economies and the farm markets in those countries remain far more solid than the Mediterranean and the other peripheral countries which have been in the news with respect to the European problem. So overall, AGCO, a play on the positive outlook for the global agriculture markets, and their excellent diversified geographic presence globally. The company is making efforts to spruce up and strengthen its margin outlook. They recently gave very good guidance for 2012.
And from what I'm reading, that they plan to continue to invest in future growth. It's kind of a vote of confidence from the company.
It is. It's a debt-free balance sheet, strong cash flows. They keep investing. They just acquired a can harvesting operator in Brazil. They're expanding their factory in Germany. So overall, a company that's committed to its long-term growth and investing in itself, as you rightly put it. And this positive trend should continue over a number of years.
All right, the bear then this week is Avery Dennison Corporation, AVY, the ticker symbol. Now, this is an office supply firm that's been around forever.
That's right.
What's going on here?
It's not a badly run company. It's very well entrenched in its two core businesses, what they call as these pressure sensitive products, and then this retail information segment.
Yep.
About 60% comes from the pressure sensitive products, about 20-25% from the other. 2/3 of the revenue comes from abroad. This is an economically sensitive sector, and it's these global questions that everybody's been talking about, Europe, about Asia, which is weighing on the volumes for Avery Dennison. We saw that in the second quarter earnings when they mentioned that volumes were weak. They referred to that as a one-time kind of a temporary thing. Crept into the third quarter, appears to have moved into the fourth quarter as well. And these trends are so long-lasting that most likely we will see that continue into 2012 as well, given what's happening in Europe and some of those questions about Asia. So the reason why we have a bearish outlook for this company is primarily their exposure to the global macroeconomic picture, which is not very good.
Well, when you say pressure-sensitive products, what you're really talking about is labels.
Labels.
That's what they specialized in
exactly.
all these years.
That's right.
So the demand for labels obviously not there.
It's not there. It's the, in fact, everybody's been talking about the so-called inventory destocking, which is pressuring volumes, which is coming in the way of the company's ability to have pricing power. And this is a phenomenon that may not reverse for another 4 or 5 quarters. We are seeing that in the company's earnings and margins. They recently sold their office product segment, which is a long-term positive strategically, but will have a near-term earnings dilutive impact as well.
All right, we've got to leave it there. We do have a bull and bear stock of the day each business day for you to review as well. That you'll be able to find on our homepage at zacks.com if you're not there already watching this video. With Shiraz Mian, I'm Terry Ruffalo.